Have you posted the link out?
Yep, link is out. I think we should be live any second now. Let me just wait. Yep. All right, we're live. Hello, everybody. Welcome to our weekly installment. I think we're starting to make this a Friday thing. It looks like the audio is working in the background, so we're all good. See, we've got some people on the video. What's going on? Thanks for joining us on this nice Friday. From quarantine land, you've got me coming in from Philadelphia. We've got a couple of our UKers on the call. We're going to have a couple of guests from out there that are going to join us and discuss what's going on from their point of view. It's going to be a fun show. I'm going to say we're going to keep it to an hour, but you guys know that's probably not going to happen. So
3 hours later.
Without getting too crazy here, Jamie, how are you doing today? Thanks for joining me.
All good. All good. Excited to have a whiskey and just chat.
Oh, you
chat
got
shit
a
for
whiskey?
now. Yeah, definitely. It's Friday evening.
Oh fuck! I don't have any whiskey left.
Have you not?
I've got a beer. I guess I could go crack open. I've been going crazy buying beer and wine lately. I got beer shipped to me from a brewery that will not ship outside of its state in Virginia. I probably shouldn't say this on air, but fuck it. I got it.
We can't even
I got
do
it shipped
online
to my
orders here.
friends.
To,
Yeah. Oh, we've got our
6-week
buddy.
queue or whatever.
Yeah, exactly. We've got our buddy Tom on the call. How's it going, man? Thanks for joining us today.
Hey, pretty good. Stuck in lockdown.
Yeah, well, seems to be. Got Ryan and Alex on the call watching us. You guys are welcome to join anytime you want. Send me a message. I'm happy to give you the hangout if you guys want to talk what you're seeing in the markets too. All right. First things
Wallet's
first.
joined. Hey, buddy.
Hey.
Hey, how's it going?
Just want to let you know we're live. Warwick's on the call. Nice of you to join us.
Nice to be here. Thank you for having me.
Yeah, of course. Anytime. Anybody's welcome. So let's get the show on the road. Try to keep it to 7 hours and which is what I did on the last show. I ended up not ending the stream, so it looked like I was live for like 9 hours.
Easy mistake.
Yeah, clearly a stupid idiot. Anyway. Yeah. Well, I'm not drunk this time. Wait, I wasn't drunk last week either. Fuck. Oh, well. Jamie, should we do the disclaimer and that? Jamie. Hello? Oh, Jamie, you're on mute. I don't think Jamie...
See, 2 sips of whiskey, I'm gone. So, yes,
I've just been using Zoom. I'm not familiar with this Google.
Unfortunately, I am, and I still don't use it well. So, not financial advice, of course it's not. I mean, we just get drunk and chat markets, so it's just for presentations, just for informational and educational purposes only. So, yeah, the moon. Let it just crack on. Oh. Hello.
Uh-oh. Did we lose Jamie, or is that me that got lost?
I think Jamie just finished and he's handed over to you. So what happened? I've got really bad internet here as well, so. Not 100%.
Did you guys cut it out there? Was that me? Hello?
I can hear you, but it's a bit choppy.
Yeah, it seems to have
can
been
hear you
back
fine.
now. Okay, that must have been me.
Could anybody confirm you can hear me?
I can hear you. Can you hear
I
me?
can hear you, both of you.
I can hear everybody fine.
Oh, okay.
I think it's working. We're just.
I think the other half may have spiked my whiskey. Something's happening.
All right. Let's just continue. We've got, I don't know if the disclaimer came in, but obviously this is not financial advice, and we're just presenting this because it's our own viewpoints, and we're talking about what we see, and it's probably going to be wrong. So whatever we say, just do the opposite. but don't do that because that's also not advice either. So good talk. Let's get into the show. I guess we should start off with our usual virus talk and that cover what's going on. I'm not even going to bring up the world map and show all the infections, but I can definitely tell you that I am getting very antsy with this lockdown, and it seems like a lot of other people are more than willing to break quarantine to go out to stores, go out, hang out with their buddies in open fields and try to socially distance themselves, which is bullshit. But, there's a mixture here of it makes sense what we're doing versus authoritarian government coming in and forcing people to do things that doesn't make sense. But at the end of the day, we're not going to really know the full story until we look back on it many years from now. But in the United States here, there's a lot of places that are opening up for business. Yeah, Ryan, Texas is one of them. And Jamie and I and Tom were talking about this study that Mark Cuban published. I think it was this morning or yesterday. He sent out a bunch of people to try and determine how they were doing as far as whether they were following protocols. Oh, nice. You've got it up on your screen. Well, you know what? I'm going to let you chat about this. Do you mind taking over here?
Take us through it.
Yeah. Right. Oh, right. Okay. Well, basically, to keep it simple, basically the Cubanator got a company to ask, I think it was 1,000 restaurants in different locations. This is within Dallas, which is in Texas. So just to see whether they were opening and whether they were compliant, etc., with following the guidelines. So as you can see on the first one, what I'll do is I'll zoom in actually, because then at least people can more or less see the pretty little chart. Look how pretty that is. So as you can see, only around 36% of businesses actually chose to open last weekend, which is really interesting, to be honest, because, I mean, once more and more of this data comes out, I mean, the market's already priced in that obviously, the virus has happened and whatever, yeah? But the main thing is one, what we don't know, which are uncertainties that will be priced in sometime soon, is one, how businesses are going to be affected, if they're going to be able to last during this quite hard period. And then as well, how are the consumer going to react? I mean, we can't forget that the US is 80% consumer-led. So 80% of the economy is all down to the consumer's spending. So if the consumers aren't going to spend much, then, well, you may as well call it quits on everything else. So what we're looking at, 36% of businesses actually only chose to open. Of that, I don't know if this is 0 to 100. So yeah, 36%. So probably around 45% were retailers, 36% were restaurants that chose to open, probably around 30% department stores, and then around 25% of malls, or as we like to call them, shopping centers. That's the data regarding that within Dallas. Now, the interesting one for me as well was the compliance. So this was basically whatever the government said within Texas to basically say this is how you should open. So the data in general here, so overall 90% of businesses were non-compliant across all mandatory protocols and all locations. The extent of non-compliance is dramatic, with a third of all locations being less than 50% compliant. Now, this is really interesting, I find, because
that's great. Yeah.
Well, not only this is dangerous from a second wave point of view, but then at the same time, I mean, there's clearly going to be a lot of communication problems. So they need to sort that out quickly, because the last thing you want is this becoming a second wave, and then all you need is a Texan to go back to New York, a very densely populated area, and then wrecked again. So it kind of worries me a little bit. For now, I can't imagine the market is going to react too much as this data comes out. I personally think that the markets will react solely on the rate of change of cases within Texas. So I think if you start seeing a large rate of change, we can't really say now because we've only just opened. So let's say if we start getting a large rate of change in 2 weeks, so let's call it the start of June. If we start seeing higher cases around the start of June, then I think we might start seeing it. But again,
sorry.
No, I don't blame the little one. I completely agree. She's in America, so she has an opinion as well. So yeah. So I mean, comes to it personally. I mean, if we're just looking at it from a trader or an investor, I think we're going to start getting a lot of data out, and I don't think it's really going to matter too much until we get a clear idea of the amount that consumers are spending, but also from a perspective of, obviously nobody wants a second wave, but also the possibility of that happening. So, I mean, yeah, that's just from a market perspective, but it is quite interesting the fact that he's done this. I think this is really good, to be honest. I think this one's a safety compliance, so 60% followed the safety. So, I mean, not really much difference there. And then, yeah, and then they did an individual location assessment. So, so this is just in Dallas. So the reason for that is I don't know, but I think they're the only state to fully open. Well, I say fully open, more or less fully open. So the state of Texas are basically, unfortunately, the guinea pig, but someone's got to be the guinea pig. But this is definitely the first one where everyone's opening. I know Germany have been talking about opening everything, but I think Texas looks like they're going to be the first state to really see how this is going to react. So yeah, read it how you like. I'll put the link in the chat so then people can have a better look, because I know that it's not very clear, to be honest. So I'll send this in. But yeah, the way I see it is if consumers all down to the consumer spending. It'd be great if I don't know if you can get actually consumer spending data in specific states. I can't imagine I don't know if you can. I can have a look if do the Texas have their own bank? Is there a Texas Fed? I'll have a little look.
I think Fred.
But yeah, so consumers and
sure.
Well, that's a good shout. Yeah. Well, I'll have a look throughout. So yeah, so I'll post that in. But yeah, really interesting data personally. But yeah, I believe the little one had something to say, Thomas. If you could give her a voice, that would be great.
She's pissed. She's like, "Are you seriously going to reopen shit?" I can show.
You're going to lock you back down.
Yeah, exactly. I can show this chart here that this is the daily new cases in Texas as of May 5th. You've got the phase 1 reopening of the malls, as you UKers seem to mispronounce. We call them malls. But
no, we just don't. Oh, really?
No, I know. You don't call them anything. They're just shopping centers, which makes more sense. It's a weird word. But anyway, you can see they're reopening when we've got new cases continuing to increase. I mean, granted, when they did reopen May 2nd, there was a kind of decrease in the daily diagnosis, but we're coming back up. Like, if this was a chart, this to me would not look like something I would want to short. So, I mean, you look at that and then you look at the deaths, maybe that looks better, but that data could just be
Thomas, are you sharing your screen? It might just be me, but I can't see any chart.
Yeah, you have to click on me inside the Hangout. It's kind of annoying. Yeah,
you're looking all good on YouTube.
Cool.
So I thought this was particularly interesting, seeing a picture like this, because this seems to be the case in a lot of the states that they've reopened, is that they still have daily new cases that are increasing and not showing a dramatic downturn. So I think that's a big problem. You can see the 7-day moving average, or the 7-day moving average that they put over this. It's like, traders are looking at this thing and putting it into trading terms, but it makes sense, right? You want to see, is the average over the last week trending higher or lower? I don't know about you guys, but this looks like a really long bottom that seems to be forming. Doesn't look good. And if we're going to be reopening, especially in places like California, where everybody's flocking to the beach, I actually think I saw an article, I don't have the link offhand, that showed that California had its largest daily diagnosed cases to date after reopening beaches within the last few weeks. So, and that happened this week. I imagine this is going to continue to get worse. The rhetoric right now is people believe that this virus will not spread as well in the summer months because of warmer air that is denser, so the virus won't be able to travel as far just by the way that density physics work. But I don't actually think that makes sense. It's more about the humidity, right? So warmer air, you're going to have less dense air. but with the humidity factor that's going to prevent the virus from traveling as far, I don't really know if I buy into that unless, you're standing. Look, there's a couple videos out of Japan showing people sneezing and how far the virus can travel just from a regular conversation. I think if you're outdoors and you're trying to socially distance in a group of 20, you're going to have a hard time not transmitting the virus. That's going to be an issue here. I don't really buy into the summer months narrative. I think we're going to see phase 2 start to escalate more so than, and sooner than I think a lot of people expected, which was going to be in the fall to winter months. But we don't have to get in further into that. It was interesting. You were talking about the Fred data and trying to see what would happen in Texas and see if that could be a leading indicator for things. I think it already is. Like that data that Cuban put out, that's pretty fascinating to me, because what that means is that these businesses aren't doing the right thing to protect their customers, which means this virus is going to transmit when people are out and about doing their daily activities. That's going to be a big problem. And I think this may actually lead to more shutdowns that are more strict, that are more authoritative, the government's just going to come in and be like, listen, we're going to take more drastic measures than we did before. I think that's what we're inevitably heading toward. The US seems to be the worst here in the world at controlling this thing. So I got a question. Ryan said the beaches are packed here the last week and our beaches aren't even good. Yeah, man. I mean, I don't know about you, but I'm sick and tired of being inside. I've been trying to go for runs, and the mask vigilantes out there are running around. Some are saying you got to wear a mask when you walk around outside. Like, look, I have a medical background, right? I have a master's in medicine, essentially. I went through a year of medical school. I'm no expert on this either, but I'm not wearing a mask when I run. I'm trying to avoid people. I run through side streets. I try not to jump in front of people and scare them. Like, I don't know. I guess I don't want to get into this too much, but that's another problem here, is that the people in this country have almost been weaponized by the government to tattletale on each other. And that's really concerning to me too, because you have neighbors who are calling the police and they're just like, oh, I saw Joe Schmo in his backyard mowing his lawn without a mask on. Like, really? Who the fuck cares? He's in rural Texas where there's literally city-sized land in between people, and they're going to tattletale that the guy that's like 500 houses away from him isn't wearing a mask. I mean, people have just kind of lost their minds here. I'm sure that's an extreme example, but I'm really concerned about that kind of shit happening where you go outside the wrong time, people are going to tattletale on you. It's a little weird. It's the surveillance state is being weaponized.
Yes, you see that? Here.
Is it? What are they doing there?
Collapse of civil liberties is horrendous, yeah.
We've got the Stasi on the streets.
Exactly. People with
Soviet Union.
It's fucked up, guys. I don't really like what I'm seeing anywhere. I mean, especially here in the US. And specifically with people, there's supposed to be a rally in my city today in City Hall. Let me see what's going on. Philadelphia rally news. Bunch of people are supposed to be going to City Hall and protesting the shutdowns, which, by the way, they just extended into June. And there were supposed to be two different ones. One, a rally that's supposed to be specific to people staying in their cars. And then another rally, which they're calling the Good Old Boys Rally, which is a bunch of something along those lines, where they're coming around, they're like, fuck it, we're going to wear our guns and show up and protest the shutdown. I mean, people don't make any sense here. I can't seem to find it. There's probably going to be some images later.
You see these jobs numbers?
Yeah, I was just going to
them being terrible. The market actually popped because they weren't as terrible as anticipated.
This is
Amazing.
it. Look at this. This is crazy. I've got the Fred chart up.
Yeah.
This is your.
Write it.
What's that?
So you couldn't write it, could you?
No. I mean, I have a great chart here that I wanted to show. Compares the unemployment rate inverted to the S&P, and it's pretty scary looking. It correlated it across the last 10 years and talked specifically about how when the job numbers collapse, that eventually leads to a sell-off, which we're clearly not seeing right now. Let me get this. Here you go. Unemployment rate versus stocks. So you see the tech bust, you see the unemployment rate comes down, and it's almost like this leading indicator. And then all of a sudden you see the S&P dropping. Same thing here with what they're calling the Great Recession in 2008. You've got the unemployment rate, just plummeting, and stocks following suit. And now we've got the unemployment rate at like ridiculous numbers, right? You've got 14.7%. The low was 10% over the last, call it 20 years. And now this thing's it's so disconnected. You see the S&P rallying. I think it's just a product of the market that we've set ourselves up in. Like the Fed's printing money. I saw this really cool zero. Yeah, we get the money printer GIF going, right? Where is this thing? There's basically an article about buybacks. Here it is. This is from Zero Hedge. Believe what you want about this site. It's fear mongering. It's, it gets views, but they've got this headline: buybacks are back, stocks soar, even equity outflows hit 2-month highs. There was a chart of Apple, Apple's got its $8 billion worth of buybacks. I mean, that's what's really happening here. When you've got, you can take.
You've got a few of these mega caps that are just able to do stock buybacks and be the first receivers of all that QE money.
I mean, it's crazy. The amount of for people who don't know how to research it. If you want to research a company, it's basically called the dividend payout ratio. Share buyback ratio. So if you have a look at that, I mean, the amount of percentage, I was going through a few today because I was looking at a few companies, and I mean, there's so many with 100% plus. If you basically have a payout ratio of 100%, you're basically buying more stocks back. You're spending more to buy share back more than the revenue that you actually created in that year. It's absolutely nuts. Like, there's so many. The fact that they haven't banned that even during this period is beyond me. Like, that will be regulated. If that's not regulated, then we could be regulated, then the Fed are going to be buying shares. Like, wouldn't surprise me if Fed start buying shares if they didn't ban that.
Yeah, I mean, they kind of arranged the. Sorry, go ahead.
Well, a lot of those limits on what the Fed can do are being either relaxed or just ignored. So I think indirectly that's happening already, at least in the US. But it's
The Fed's kind of figured out that they need to do whatever's necessary, and it doesn't seem like anybody wants to argue with them over the constitutionality, or whatever word I just made up, of doing such things. But they got around restrictions on buying high yield and corporates using some, intermediary vehicle that skirts the law. I mean, that was pretty fucked up. So why can't they just do the same thing with equities?
But I think that's a really good point. That's a really good point what Lomax was saying, because like a company like Apple, they can buy loads of shares back. They got so much cash. Like they're gonna be huge like in 5 years' time, because they're just gonna buy so many companies on the cheap, and they can afford to buy share backs because they got so much cash that they'll be fine for the next 5 years. But I think it's a good point, because you're going to have companies that would love to buy their own shares back, but they can't because they've probably got pretty bad credit ratings. So if they do start buying their share back and then they ask for a bailout, then you're going to have the government going, well, why did you spend $1 billion last quarter on share buybacks if you now need a bailout? So I think there's a lot of games playing behind the scenes between the Fed and the actual companies. So it will be interesting to see if the Fed get to a point where they're just like, you know what, you're all taking the piss. That's it. We're not gonna bother. I mean, up to a certain point. I mean, if they said that, then everything would go down 80%. So, but yeah, still, it's a good sign to just, it's still a long way. We're still so long way off to know what's actually going to happen from a year, 2 years from now. So just got to pay it. It's like playing it week by week for the moment. So that's literally all you can do.
Yeah, I mean, You're right. Look at this. This is the chart of the total assets owned by the Fed here. This is like their balance sheet, essentially. 7 trillion. Pretty crazy, huh? Like we literally, in the last, call it 2 months, 3 months, we went from 4.1 to 7. I wouldn't be surprised if this goes to 8. And then they requested another 3 trillion this past week. So,
yeah, I was about to say, yeah. Well, that'll be fun. 3 trillion for next quarter, isn't it? So,
I mean, you know what? Everybody gets a bailout. The only problem is it's not going to everyday people who need it. I mean, the food bank lines here are ridiculous, and the money that's being pumped in. Whatever. It sucks. There's no doubt about it. There's a lot of people suffering, and this is going to inevitably lead to some bad shit. I mean, I don't know if that means people with pitchforks in the street going and overthrowing government like they really should be and burning down the whole system, but I don't think people can if they're starving, right? And maybe look,
they're also scared. I think it's important to put in the point that they're scared, the people are scared. So what does that mean with the authoritarian side? One thing that I've noticed in the UK is people just kind of rolled over and accepted the status quo like that straight overnight. And I can kind of understand that, but it's still dangerous. It's a dangerous mentality to be in.
It certainly is. I don't know about you guys, but I think this system has been broken for decades now. And we're just kind of on some made up life raft in a magical sea made of salt that at any moment is going to be completely dried up, and whatever life raft is going to be useless because you're going to be stuck at the bottom of this lake that's completely empty with nothing around you. And that just seems like the direction we're heading in.
Yeah, it's like, for example, you're forced to play a game, and the only way to actually finish is by just complying with what the hell's going on. Like, unfortunately, you've just got to play the game. Like, we all know it's all a load of cobblers, but yeah, you just got to play it and somehow make it work for yourself. So then at least you can be profitable. As weird as that sounds, but yeah, it is really difficult to be unbiased, I think, in this kind of scenario, and to try and put your beliefs and thoughts to one side and just admit that whatever the Fed are doing, you just can't fight the Fed. You can't just go, the Fed are buying, I'm still short. Like, you can't be short while the Fed are getting another 3 trillion next quarter. You're basically fighting against the most powerful institution in the world. So it is really difficult. Like, unless you can find specific, I think this is where picking specific stocks is the only way to play the game over at least for the next couple of years. The only way to be profitable is you're going to have to be active. Like, you can't just be a passive investor and just buy the S&P. You've got to look for the individual names, without a doubt.
Yeah. The commodities are starting to do well. So uranium, gold.
Yeah, for sure.
I disagree with your viewpoint there, Jamie. I agree that it's going to be very different, but I think there's so much emotion in the market now, and that this rally's gone too far. I'm quite heavily short here, personally.
Yeah, but I mean, you've got to try and be hedged in this environment. Like, I suppose the main thing is like, if you are short in this environment, you've just got to accept that you are fighting the Fed, and it's really difficult to do so. I mean, at any moment, some sort of data or some, for example, what Trump and there in the US are obviously starting to talk trade negotiations next week. That could turn sour, and that could definitely send the market negative, and the sentiment negative, because it's all emotions at the moment. So, I mean, yeah, I completely understand being short. It's just until you have that, I suppose, catalyst to make everybody bearish and move it downwards, it's really difficult to go short without having that certainty that it could still go lower. It's really difficult. It is a really difficult market.
Yeah, no, agreed. It's good though that there's volatility. That makes it a lot more interesting as a trader. The fact that there's a good chance to make money from that. sideways market is much harder.
Yeah, true.
And actually,
I mean, for me,
volatility's come way off since after the first clash. Volatility was immense, and you couldn't do a lot of these strategies to take positioning for the second leg down or whatever. But it's actually come way back down, like something like in the 20s or high 10s. Now. I was looking at earlier. But it's
crazy. It's nuts. I mean, the only reason. Yeah, like I mean, for myself, I hate day trading. So for me, I'm a lot more chilled doing like 1 to 3 month and finding those stocks to have those fundamentals, because it's a lot more like I don't want to stare at like a screen. I like to know, like, okay, I'm looking at this company, so I think this is going to do well. I can't handle it. Like I'm so much more chilled going from 1 to 3, like doing 1 to 3 months or longer. But everyone's personality is different. I can't handle that much adrenaline.
Should we go over some trades?
If you want, sir.
Yep. Yeah, sure.
All right. So last week I had Interactive Brokers paper trading thing up, and of course this damn thing didn't save my account. Let me just check again, because when I went in the other day, it didn't save any of the positions. I went and reviewed them from the YouTube video. Yeah, we're gonna cover silver soon.
Paper trading thing's weird. It seems to have a lot of issues like it.
Yeah,
doesn't
I
quite
don't
behave
know.
like the real one.
It's kind of a pain in the ass. You're right. So let me just go in here and see, but I think it's fucked. So I have this Thinkorswim paper trading. I have an account with them, so that should be okay. I didn't put the positions on because I wanted to do it live. Last week I had an S&P short at 275. I had a Starbucks put at the $70 strike. We're going to put stuff like that back on. Granted, from when we put them on, those are losing positions. Yeah, here they are. So I actually think I sold premium on AT&T, the $31 calls, and those are going to expire, so that's okay. The S&P 275 put's not looking too good. I think we lost 50% on that on the paper account. But you know what? It lost the position, so we're going to start tracking it this week. So I got a free pass 2 weeks in a row. Yeah, and that's not something you get so often in trading. Here's that Starbucks 70 put. So let's just go quickly and try to put these on. I specifically like Starbucks still to the downside. Let me see if I can get. I played the July monthlies, and I liked the $70 strikes. Let me give all these. So $70 puts are 238, ask 247. Let's see what this looks like on the implied. This should really be coming down now. Like option right now is probably one of the better times to be buying options. I showed that VIX chart, better time from what it was previously. VIX is hovering around 28 right now before the close. Oops, this isn't it. And if you're a Fibonacci believer, we're coming right into 78.6, 27.5 is that level. 200 moving average is quite a bit lower at 23.5. I don't think they're getting it sub 25. I would be pretty surprised to see that. But at this point, anything's on the table. And we'll talk about what the markets are doing really quickly going forward. Yeah, I got paper liquidated, Ryan. You got it. It's the worst feeling ever. So the $70 puts are bid 236, 247. I don't know if I can actually split the difference here. And also the problem is this account is 20 minutes delayed. I don't know why that is if I've got a real account with them. I don't know why they can't give me access to the real data. So I'm just going to go ahead and hit the ask here. 10 of these is going to be, we're going to try our average size at about $1,000 each. This is giving me an option. This is giving me an account of $200,000. So, maybe I could do sizes of 1%. Each position is $2,000 on average. Let's just do that. So 10, I heard the whiskey there. So,
oh, shit.
Something being open.
8 of these contracts. Yeah, there you go. 8 of these contracts is going to cost me $19.76. So I'll send these. Let's see if this filled me. I'm still trying to get used to this platform here.
It's a good environment for selling premium, though, isn't it? Because you've got, even if you're having to buy back your short options, you can, when volatility is up, you can reduce your cost base fairly effectively on a few of these stocks.
Would you think that? Do you think this environment is still good to be selling premium? Even
Well,
with
yeah, maybe not so much now.
Definitely.
It has been the last few weeks, but yeah, it's come way off now actually. So yeah.
Yeah, I mean,
Or S&P's. Yeah, it depends. Yeah, depends on the stock.
It's still valid. You just got to take into consideration. You're not going to capture the volatility in quite the same way. If it's a short-term option, there's still plenty of theta you can harvest.
Yeah, those really short-term ones can work.
Yeah, it'll still be really tasty, especially if you've got a slight directional move as well.
Yeah, I mean, as far as the targets are on this, let's go over that. So Starbucks, you guys remember the chart from last week. I mean, this thing could break to new highs, just like the S&P looks like it wants to bust these highs as well. So the other play that could be done is you could buy an option, a call to hedge this out. To work on grab options chart. Oh, interesting. So Grim converted TV scripts to work on TOS. I do like being able to graph individual options. Yeah, that'd be cool. All right, so you could do the weeklies. Like if I thought that here's the thing about the S&P and the broader markets. I think things are kind of screwed up for the next week and a half, or into options expiration next week. Those of you who know Charlie McElligott and his gamma flip models, it seems like most of the CTA trading models, they're kind of gamma neutral right now, as far as I understood. They did flip net short down here a couple days ago on the S&P, but then that ended up, or was it net long? It was net long, and then they ended up changing some of their positioning 3 or 4 days ago. But anyway, into next week, I wouldn't be surprised to see on options expiration going into that we just pop the high here. A lot of people are getting bearish in the market. And when people are bearish and they're shorting, and you see everyone on FinTwit talking about how bearish they are, I mean, it's really become a contrarian trade at this point, where the market's going to keep powering higher, sucking more and more people in until they've lost their conviction to short, and then it's just lights out after that. I think that's what's going to happen here. The question is, how far up do we go? 300 is just above 61.8. 78.6 is 313. There's a gap all the way up at 330. If they really wanted to make a whole bunch of people's lives miserable, they could pop this thing all the way up there. But I would find that really, really difficult to imagine. There is a gap here on the volume profile as well. So you have to keep that in mind when you're putting on your puts. I think at this point, as Jamie said, you have to hedge. So how do we hedge out our downside risk on Starbucks in the short term? I would just buy some short-term calls and see if we can get some attractive pricing. Like the $75 calls right now are pricing out at $3.20. That's not too bad considering where we're at right now, right? Intrinsic value on this would be $78.25. The underlying stock price would be $78.25. We're trading at like 77 right now, last I looked. So, I mean, it's not the worst idea to put something like that on and try to hedge out some of the downside risk in the short term. I don't know. You guys are better at trading these hedges than I am. What do you think about something like that, Tom or Warwick? Is that kind of too crazy? Or?
I'm just looking at the volatility on Starbucks, and it's come way off, but it's still at like 35, 32%, something around there for a weekly option. Whereas the S&P's come all the way down to, I think it was low 20s. I'm trying to get but I mean, it's getting into the territory where you can start doing those sorts of strategies again. But going forward, that may happen. Yeah,
it's a difficult one. I like harvesting as much theta you can on kind of some of the shorter term puts if you're long a put, especially in this market. But I'm actually looking now. I wanted to put in a position to hedge out some of my shorts with a short-term call, but they're still looking really expensive. There's still enough. There's still enough fall in there that it makes it a little bit undesirable for me. I know you've got some, haven't you, Tom?
Yeah, I've got on my screen the historical volatility in the I mean, it's slowly loading because it's that paper account, but you can see. We've come off a long way since the drop at the top of the market, but it's still sort of more than double what it was back in the good old days of pre-dump. So it does limit the strategies you can do, like simply like buying protective puts and that kind of thing can be a bit difficult to get away with.
What about something like harvesting some premium off of Starbucks? I mean, selling some calls into the May weeklies, is that too dangerous without owning the underlying?
Naked, you're playing a dangerous game.
Yeah.
You could do it.
You could do a credit spread, but you could do a credit spread if you really wanted to. But my problem with that would be if you're long a put, you're essentially short already, and if you're selling a call, you're almost doubling down on that. I'd rather sell some put premium at a lower strike to the put that I had, simply because if the shit is about, or if it craps out, that okay, you're going to give away some of your upside, but you're not. I just think selling a call if you're short already, you're playing around with your risk a little bit too much. If you've got that conviction, well, that's great, but that doesn't suit my risk models anyway, personally.
Yeah.
There are certain stocks, like one we were playing was Scorpio tankers, with this whole oil narrative of having to store oil on tankers because there's nowhere else to put it. But on those types of stocks, there's a few sort of situations like that where you can sell way out the money puts and still collect a massive amount of premium. And then even if you can hedge that, even if that narrative didn't play out or whatever, limit your risk to say $100 because you're buying the one strike lower, and you're still collecting a huge whack for each contract sold.
Yeah,
but it is very stock specific.
Look at this is the Sting options chain. I think we should leave Starbucks. Like, I've got the $70 put. You have to understand, if you're going to put that on, that's an all or nothing trade. If that doesn't work out, you're losing the entire position, for those of you that are new to trading options. But that's how I'm playing it. I've got the $70 out to July. I would assume that between now and then, we're going to get a pullback. And if we don't, then I lost the position. So that's on. If you're uncomfortable with that, you got to figure out a way of hedging out the risk. You could also, the guys just said a credit spread would be good. That's another way to play it. I'm not going to play it that way, just because I have a strong conviction that this is fucked. I guess, with the July $70 put, you could sell some puts down below. You go long the $70 put, and then you sell or short the. I guess you could probably do something like the 60. Where's the July? That's probably too far away. It would probably be the 65 would be my guess. So the July 65s, you could pocket $1.44. So you're essentially cutting the price of this more in half. But I mean, if you look at more than half, if you look at the chart, 61.8's at 61, 50% of that would be 64. So, I mean, you would still be making money. Your max risk would be defined. It's certainly a way of putting this trade on and understanding that you won't actually lose all of it unless it goes below that 65 level. Then you would be zero.
And your worst case as well. So that's the nice thing, is that you can define your max risk up front, and you're not going to lose more than the cost of the option. And even if you hold it to expiry, which you probably wouldn't do that anyway.
Yeah, I kind of
it's a nice way to frame trade risk reward.
Maybe I should put it on that way. Do the 70-65 spread, or maybe I could do a 70-65 spread. That means you'd be looking at quite the sell-off, right, from here, just to even get down to that $70 range. The way that this has rallied.
To be honest, if we get any sell-off now, though, it could be quite emotional. I think we're at quite an interesting point. There could be a turn. It could go sideways for ages. Who knows?
Yeah.
If it goes, maybe not as aggressive as this first leg, but I'd expect it to be relatively sharp still.
Yeah. Okay, so that's the idea. 70-65. You're buying the $70 put, and you're selling the 65 to offset some of the cost of that, and you define your risk. That's one way of doing it. Again, I'm going to keep mine as the $70 put and see what happens. But moving back to Sting, that was an interesting idea of selling premium. I mean, if you look at the implied volatilities on this thing, it's still over 100%. It's still crazy, right?
Look at like a $10 put on that. I can't remember what expiry I have.
I mean, even the July $10 puts, you could harvest a $40 25-cent premium just selling that. I mean, even the $15, you're going to get $1.40. I mean, could this play really just crap out? I mean, at this point, it seems like people. I don't know if anybody listened to the Macro Voices podcast as far as the storage and Cushing, and they're showing freeing up a degree of storage there. And, you know, Eric Townsend goes in and explains how that's actually false, and people aren't understanding that it's not actually new storage. They just need to keep things open in order for them to do, you know, whatever operations it is to purify.
I think the only risk with that narrative is it probably becoming a bit crowded. It's getting a bit too well known. So, but even still, you know, it would have to dump to new lows. And in the meantime, even if you had to buy that back or you hedge it out with a vertical spread or whatever, you're still collecting this huge volatility premium.
Yeah.
So there's a nice one to do.
Kind of fucked up what happened. They beat their earnings. You know, their expectations were like 50 cents or something, and they came out with like an 85-cent per earning. If you look at their LR1 and LR2 fleet, their charter rates went up by like more than double, and then they're calling it, you know, a 10-cent dividend, which, you know, is whatever. As long as they're keeping that on, it's paltry compared to the cash that they're making. And they have like 22 million or something on the books in cash. I mean, they looked great. But the problem was the market anticipated everybody knew these earnings were going to be good, and it's sold off. Everyone, you know, all the Reddit guys that went long tankers, they're like, fuck, I put my life savings into this. I thought it was a slam dunk, and I didn't take any profit, me included, on this thing that was rising up, and now I've got a zero to count. Like, you know, this
you see
is
that reversal at 61.8 though, so it's
So speaking of technicals here, I think this is a great area to try and recapture this thing. I would have rolled out the other position or at least closed it out and put it back on in some way. If you want to do some fib-based, here we go, redo these fibs. So you can see we came right into 61.8. This is a really interesting zone to be capturing this thing on the long side. Let me see what a fib trend extension would do here. Yeah, you can see we probably go back up and retest those highs, at least fill this gap. A full extension puts us right at $32. I mean, at this point, it's still hard to put this thing on a flat out call just because the premium is so stupid high. But these things have come down remarkably. I mean, $30 calls out to July are 90 cents. I don't like July. I like the August contract. I think that would be more than enough time here if there is going to be some fuckery with the storage and the way the oil contango, super contango, is being messed around with. That seems to be enough time in my book to be playing this thing. So I'd be looking. I mean, at this point, I have $30 calls in my portfolio, which are less than worth half, and I did not hedge that out. So I've got a lot of risk on that position, but I've at least defined that I'll just lose the whole position and nothing more by, you know, selling naked premium or something along those lines. But the other thing that you can do is just buy the underlying. You know, like this would be a really great example to just buy this thing right here. Like that's what I'm going to do here. I'm going to buy this thing at 1940. So I'm going to buy, let's see, this will be what, $1,000, $2,000 to buy 100 shares. I mean, that's only one contract, right? So do I have to beef this thing up a little bit? I guess I probably do. So I could beef this up to 1,000 contracts just so that we can get the 10 lot on it. This is going to cost me 20 grand. So it's 10% of my position. That's probably too much. Maybe I'll cut this in half. Let's just make this 500 contracts. I'm just doing this by the seat of my pants. This is not the way that you should be assessing risk.
Do you remember what happened? I don't know if you guys were trading during the first big dump on the S&P or any market, but the market makers all just pulled their bids and offers. So the only way you could actually take profit on any shorts you had was to buy the underlying, which is obviously stupid expensive. So it was harder to make money there than it may have looked.
Yeah. I mean, here's that was crazy. So how messing around with this thing can be interesting because you can buy your calls now, and then what you can do is you can either sell calls or sell puts, and then you'd be happy to own this thing. Like, let's say, for example, let's go out to July and see if we can, or even June, right? We could harvest some short-term premium here on June. The $15 puts are 75 cents. So why shouldn't I sell 5 of these against my 500 contracts and pocket, what are we going to come up with here? Pocket $370, right? If this thing does end up going down, you can basically, right? If I understand this thing, they're going to take your shares away at the $15. Kind of keep forgetting how this, I'm such an options dude.
Yeah. Have to think about it. You can also, the way I've done this on Sting is to write like a longer $10 and then buy a short to dated $9.
Okay.
Or something like that, and which costs something like 30% of the premium that you get from the longer one. But by that point, it's going to have made, I think it was like July or something. You'd expect it to make a decision by then. You'll know what's going on with the stock. So,
right. Well, I think what happens if I sell a put is essentially if it goes below that $15 strike, they take away all of my shares and the premium. They could be called, or if they're exercised, right? If they're exercised, then I lose the shares. I have to pay them out and I lose the difference. But if they're not exercised and this thing expires sub 15, then I have more risk to the downside below that $15. Is that right?
Yeah, you've got the obligation potentially to deliver shares
at $15.
At that strike at $15. Yeah.
So I would lose $4.45 a share from where I bought them. Or $4.45. You know what? I still think that the chances of this, if that makes you uncomfortable, you could go to lower strikes and pocket more premium. But you could even, I think that kind of makes sense.
But it's also, that's very unlikely to happen if it's unless you hold it to maturity.
Yeah.
There's always time value, so it's not in anybody's interest to exercise.
Exactly.
Until the end.
So you saw, if you look at the options buying power, I just got halved. That's because the margin requirement to carry some of these positions is like stupid high right now. I sold this thing, didn't I? Yeah, -5, trade price 75 cents, and this is fine. So I don't know why it's showing me at a loss right now. Whatever. All right, so the other way I'm going to put this on is I'm going to buy the Octobers, and I can keep messing around with this to later dates. So even the $25 calls right now are still stupid expensive, right? $3.40. That means your break even. The stock has to go to $28.40 still. It's still a lot for this thing to have to move. It's almost unfortunate. You could probably buy yourself. I own the 30s. Do I put back on this $30 at $225, expecting this thing to almost double? That's up to you. I guess I can put this thing on in the paper account. It's just like the 25s are so much cheaper. You've got 76%. Oh, this is the probability. Your delta. Could you do a synthetic here? An 80-cent delta would be the $12 strike. Bid 880, ask 920. That's pretty ugly too. If you already own the underlying, I guess you don't want to do that. But all right, so you know what? In the short term, I think we got to wait for this thing to settle down. We do own the underlying. Maybe this thing just goes sideways for a couple days or a couple weeks, and then the implieds come down and we can actually buy our calls. The other thing you could do is you could hedge wrap the position. That's another way of doing it. But let's just leave this for now. We've been talking too much about these two stocks. The other position that we had was AT&T. We sold the $31 calls naked. That was a dangerous position to put on if you don't own the underlying, but nonetheless, this thing's closing at about $29.74. So we would pocket that premium. And then the last position that I had on was a set 275 S&P put, but I'm not going to put that on right now. It looks like, okay, so this got filled. So should we talk S&P, guys? It seems like we're coming into close at 340 here.
Yeah, looks like it.
Oh wow, yeah, okay, it's pumping.
Yeah. Wow. This
Yeah.
thing's really close to retesting the highs. We're at 292.40.
I want to sell some more premium on this, I think.
Are you?
Yeah, I'm going to sell some more premium.
So you own the underlying then?
No, I've basically hold puts, so I'm going to sell some puts. So it's basically an effective diagonal spread.
Just being, it's covered by the puts. Just being really tactical about the clipping. But not you've got to avoid things like holding over weekends and that sort of stuff. But apart from that, there's a lot of volatility on S&P in particular.
Or at least having a low enough strike.
Yes. Yeah.
But some of the premium yesterday was so much nicer than today.
What strike you're looking at was?
I'm just trying to price things down. I'm probably looking 275 up for next Friday, but not very sexy. You get about 50 cents for that.
Yeah.
Whereas whether
That's it's Friday, so who knows what's going to happen over the weekend.
yeah, or whether it's maybe give it a little bit more time, and then if you get more of a directional move, you'll get harvest a little bit more. But do it at a lower strike. I don't know. I'm just trying to see what's looking good.
So we're at 292. Yeah, the 275s are 57 cents to next Friday if you sold those. I mean, we would have to have a pretty significant correction next week, which going into options expiration and gamma pinning, I think the likelihood of that is pretty low.
Yeah.
I almost like doing that, selling the 275s. So you're selling 275 puts against the long dated puts that you have?
Yeah, so we've got a mixture of 295s and I've got one 290.
Nice.
So it's just basically trying to offset some of the fee decay of those longer term puts, and trying to just offset the cost of the trade. It helps you stay short.
Yeah.
Helps
And
smooth
if
it
you've
out.
got multiple, you can take some premium on half your position or something, so you don't miss out fully if it does dump out. But it's definitely approaching a asymmetric point to do that kind of thing.
Yeah, I think I'm going to hit these 275s for next Friday. I think.
Nice. I'll put that in here. So I'll sell the 275s at 50 cents. Naked, which is dangerous, but it's a paper trading account.
Right.
I mean, just know that if you're going to take this trade and you're naked and you get, exercised, you're on the hook for.
You'll actually get a phone call from Interactive Brokers for once.
Oh, really? Sir, I mean, if you have the margin account for this, you probably you should own the underlying. This is going to be really hard to do if you don't have a big enough account. But I will diminish my buying power here, right? Because I'll be effectively buying $41,000 worth of, I'll be selling $41,000 worth of premium, which effectively halves my option premium. Yeah, so even in a paper trading account, I'm not doing 10 options. So maybe I'll just do one. I'll pocket $55. And even that, that's $4,000. That's pretty crazy to carry that, right? Like my max loss is 27 grand. So remember, you do this naked, you got a max loss of $27,000. Granted, we have to sell off pretty hard for that to happen, but
yeah, the advantage of having the puts is that the margin carries 0, so because you're covered. So that's the difference between doing it naked.
Yeah, but this is the problem with selling and harvesting a bunch of premium is you really need to have a pretty sizable account to not be locked out of trading in the future. All right, so I sold one contract naked, and we'll track that into next week. It's really interesting to see the S&P rallying into this. It almost makes sense to be buying buying calls. So going long puts into, hell, I would even pick June at this point. So the June monthlies, the 19s, I had the 275s before. We could probably buy a Wow, these are $5, right? So they used to be $11, but you could buy the puts at 561 right now. Should we try this one more time? Implieds are 31%. All right, this is just like fun in games, right? So we'll put 10 contracts on. That's going to cost us $5,000. So a little more than our 1% risk at this point for the whole portfolio. So let's just size this a little bit better. We'll do 6. That's still 3,000. I can't do math. We'll do 4. So 4 gets me to 2,200. So I'll send that. We're buying those 5 calls. Oh, sorry, 5 puts on the S&P into June to capture any kind of pullback. Yeah, I'm only on the hook $30,000. So that's kind of our on-the-fly S&P trading. I hope you guys enjoyed that. Jamie, you're awfully quiet over there. How are you hanging in? Jamie's like, I'm at the bottom of my bottle.
No, I'm munching on food. I just thought I'd leave you lot to your little options to explore.
All right. Is there anything else we want to cover in equity land? We've kind of gone an hour and we haven't talked about crypto yet.
Crypto mining.
Yeah, it's starting to get a bit more profitable now. Which is
Much profits.
Yeah, wow, I don't know. There's lots of money down in a big project. But you know, it's longer term play.
Took some nice profits on some Hut 8. Happy days.
Yeah, what? You guys love that stock. What is that again? It's a mining company?
They only mine Bitcoin, but they're the only ones that are kind of trustworthy, if you know what I mean. Like Hive had some problems with their partnership. Hut seemed to be the only kind of reputable ones left, at least from what you can read in like the earnings reports and stuff. So, I mean, that's the only one I actually look at if it's coming to it. Personally, I think every other one's dog shit. I mean, Hive is quite a good one, but then they had problems with, I think it was Gemini their partnership is with, and then they had problems with the board and stuff like that. And for like fundamental stuff like that, I just can't touch it. So for me, just Hut. And happily, it's gone back down today. So you never know. By Monday, you could get a nice little bargain down to 78 cents or something. You know, one can dream.
That's on Hive or on Hut 8 or Hive?
Oh, sorry, Hut. I don't touch Hive.
Okay. Yeah, I don't really like doubling my exposure through equities on crypto as much as the next person, but I don't see a problem where you bought this thing when it was down here, right?
Yeah. So I took some profits around 150 yesterday. I'm a bit of a rookie, to be fair. I honestly thought it was a bank holiday in the US. So I was like, oh man, I was like, take profits before the weekend. I was like, it's bank holiday tomorrow. I didn't even bother looking to see whether it was bank holiday in the US. It was like, for fuck's sake.
I was getting really worried because I had puts expiring today. I can't happen on the bank holiday.
I've been caught out by that so many times. Vice versa. All the US markets will be open. You're like, what the fuck's going on?
Oh, I was so annoyed. I would have held on today as well. So yeah, I got around. I think my average sell was 148 yesterday, and then I had a look in the morning. I was like, why the US? I was like, oh, US is open today, and then it went up quite well. But it looks like it's actually the last like half an hour. It looks like it's just. It seems like everyone's taking profits before the weekend, basically, which, I mean, to be fair, I'm not surprised. I mean, who knows where BTC could go from here? So makes sense, to be honest, especially if you're going to trade a Bitcoin mining company, but then obviously you can't trade it over the weekend. So, So yeah, just take the profit and then just chill and have a whiskey. It's just the aim of the game, isn't it?
What's the whiskey you got on the go at the moment, Jamie?
I've got some Glenmorangie, mate. I tried to order some. I usually drink Talisker, but
Talisker's delicious, very smooth.
Yeah, but it just wouldn't arrive, the Talisker, so I had to go around the corner, and the best thing they had was the Glenmorangie, and I'd never had it before. It's actually really smooth. It's really nice. In fact, it goes down really nicely. I'm
on the Jura this evening. It's a little bit more smoky and peaty.
I'm going for some. What's that? Portuguese port. What is it?
Jura. It's from Jura's quite a smoky or slightly smoky PT whiskey.
Oh, right, okay. I have no
So-
idea, mate. I'm really bad with my whiskies, to be fair. I really enjoy drinking them, but I need to experiment more.
It's the most important thing is knowing what you like. Yeah.
Yeah. Well, after a few, I had a Talisker, and then that was it.
Talisker is delicious. Is a
Yeah.
beautiful. You come across the Highland Parks, they're really nice as well. Very
Oh
smooth.
man, yeah. I had Highland Park. Like I bought loads of mini miniatures to see which ones I liked, and Highland was up there, but there's no Highland around here, so like the good whiskey shop around here is closed. Unbelievable.
Mate,
You
there's
know,
some
the
amazing.
miniatures always are the best batch, and then you get the full bottle of this stuff, and it's not as good.
Yeah. It goes down, and it goes down just as quick as a miniature as well. That's the problem.
I'm jealous. You guys, you're drinking your whiskey and scotch, and I'm sitting here at 3 o'clock in the afternoon with my water.
Yeah, I can see how that's a dilemma.
I was going to run downstairs and grab a beer to hang out with you guys. I think, I'm going to have to start doing this every Friday. I'm just going to crack open a beer and join you, because the last time I did scotch, I was fucked up for the rest of the day and I couldn't do anything.
I was hammered. I was absolutely wrecked that week. Like I kept on drinking, and I fit. This was last week, wasn't it? Last week we got sloshed, didn't we?
No, it was 2 weeks ago.
No, it was last week, wasn't it?
You were sloshed because your broker was giving you shit last week, remember?
Ah, good point. Yeah. I had problems with my broker. At least that's all sorted now. But what's the week before? Jesus, that went quick. Oh, that was a good week though. It was great.
Should we jump into some technicals on the?
Yeah, we should probably stop talking about whiskey and start talking about.
Well, you
Sorry,
know,
I derailed that.
everyone
No.
can just fast forward through this
Understand.
part. You know, this is more for us and less for you. So screw you guys.
The whiskey is the most important part as well. So recommendations: Highland Park, Talisker, Glenmorangie, get on it, and Jura.
Yum.
It's tasty.
I do love myself a good peaty scotch, I will say. All right, so first things first, let's get into some news. I think would be good to start off with. Let's take a look and highlight some of the articles and things that happened in the crypto space over this week. One of the more interesting things that happened was Mr. Paul Tudor Jones himself, one of the bigger names in really the investing world, has come out and said that he is buying crypto in his fund. Where the fuck is this article? Ooh,
Wow.
I'm not supposed to talk dirty on this show. I'm sorry. Actually, we can talk dirty, right? All right, so Zero Hedge, another one. This is the gift. This is
Nothing wrong with Zero
circulating.
Hedge, perfectly legit website.
Yeah, you know, no conspiracy theories or any kind of.
Where you get your fundamental analysis.
I mean, I don't know about you guys, but I think fundamental analysis is bullshit. If you pay attention to fundamentals, you're an idiot.
Yeah.
Well, I'll keep drinking my whiskey then.
Yeah, no comment from everybody.
It used to work back in 20 years ago.
Yeah, right.
But since all the printing.
Yeah, you know
I'll
what?
show my P&L. And then I'll move on.
Yeah, exactly. If you're gonna say fundamentals are bullshit, show us your P&L over time and see how that's been working for you. Anyway, with that being, Paul Tudor Jones buys Bitcoin as a hedge against central bank money printing. This here is actually a live image of the Fed right now. You can see that they all have to wear suit and ties while they're pushing out their money. Also, if you're interested in seeing what that looks like in a graph, here you go. You can just see the printers going, boom, right up to $7 trillion bucks. But anyway, Paul Tudor Jones is saying that he's buying Bitcoin as a hedge against inflation, which is an interesting discussion in of itself, which we didn't cover. Basically, all this printing you would think would eventually lead to inflation. But if you listen to a really good podcast yesterday from Macro Voices, they talk about cycles. The guy who was basically the creator of the understanding cyclical analysis when it comes to growth and inflation, he talks about how those two are very separate from each other. I'm going back into equity land, I'm sorry. But anyway, he comes out and says that Bitcoin will be a hedge against this inflation, just like gold. He puts a chart. Where's the chart? Here it is. Nope. He basically compared Bitcoin to gold. Here it is. So he overlays Bitcoin and gold in a way that he thinks that Bitcoin will eventually undergo another exponential increase, just similar to like gold did back in 1980, and the situation that happened back then, the crash of 1980 that none of us remember because we're all too young to have been alive for that, I think. But it's an interesting argument. I don't know if we could see Bitcoin going to crazy levels like that. You know, that's 80 grand. But then they reference the stock to flow ratio, stock to flow model by that guy. I was following his Twitter, Plan B. He's this like, I think he's Dutch or from the Netherlands. And I tried listening to his podcast, but he's a very smart guy. Don't get me wrong. But trying to listen to him talk and describe what was going on was a little like paint drying. So I had difficult following along. Maybe I'll have to pop a barrel full of Adderall and listen to it again and see if I can't follow along. But anyway, if you know this guy's work, you're very familiar with his price targets, which are absolutely astronomical. You can see the original article is here on Medium. You can just Google Plan B stock to flow. He published this back March 22nd, 2009. And I think back then he had price targets of like 80,000 or something. He's not backing away from stuff like that. I could be massively off that. Oh, here it is.
If you watch all of those bullish charts, they're on lookintobitcoin.com. They've got a whole bunch of very bullish looking Bitcoin charts.
Yeah,
but
if you want to smoke some hopium, that's a good place to go.
That's the one.
Yeah, so I mean, that's cool. It's nice to see a big fund manager believes in it. Maybe that's why we're seeing this article from the CME, or at least the news out of the CME, is that open interest is at ridiculous highs here. Skew, again, I've been using this the last couple of weeks to take a look at underlying price valuations and movements in the options market between Ethereum and crypto. Here, Skew is publishing the CME Bitcoin futures open interest versus volume. And you can see the daily volume is over 600 million, and the open interest is way beyond that. And the speculation is that it's not just Paul Tudor Jones getting into this, but it's a whole bunch of other people that are also interested from an institutional side point. And I think that
I don't think there's been much. I mean, I haven't looked very recently, but last I heard a few weeks ago, there were things like Google Trends and all the social analytics and stuff are way down. Like nobody cares about Bitcoin in terms of the public or retail traders. So it's interesting that people like Paul Tudor Jones are choosing now as the time to get in. Very
yeah, I mean,
it's whether that is bullshit or not. Who knows? Like, it's pretty contentious to buy just before. It's pretty interesting to buy just before a news event, especially a news event that everybody knows about. So whether this will be a buy the news event or sell the news event, I suppose.
It's a buy the news event. In the past two halvings, it's led to like 5 or 6 weeks of sideways and down, followed by. But I suppose if you're thinking long term.
I think what's more interesting with this is basically you had that liquidity crash on Bitcoin, and it's when COVID came out, and everyone was basically just getting margin called, needing to raise cash. And what's happened in this recent kind of like consolidation and then like bullish move is we just retraced that. So the question is, is this priced in for the halving now, or are we just going back to levels pre kind of liquidation when people that
you could say it's like
get out?
It's obviously approaching these major highs, but it's beat all of its fib zones. It's above 88.6 of a retrace at the moment. So it does have some resistance to contend with, but a lot of traders would take that as a bullish signal, the fact that it's up. It's retraced that much already.
I mean, I'd love to see it retest 9,200 just to test that long-term trend line, to turn that from resistance into support. I'd love to see that and then bounce off there. But I think we have to, if anything. Like, I mean, it'd be really difficult because I think it's really good. Obviously, like Bitcoin loves to create little support and resistance levels. Like, so I wouldn't be surprised if it tries to retest whenever that may be. The 9.2. But then at the same time, we have to be cognizant of the correlation it's had with the S&P since the 20th of Feb as well. So the correlation now is moderate to high with BTC to SPY during the US opening hours. So again, it's another question of, well, if the S&P does move down, then BTC will move down with it unless BTC decouples. At the moment, no assets are decoupling away from SPY. I mean, even gold's kind of following it as well. So until we know what the verdict will be with the SPY, I still can't see. I mean, BTC could obviously keep moving upwards, especially like, weekends can do what it likes, etc. But while it's still got a moderate to high correlation with the S&P, it's really difficult to call bull massively, especially with the uncertainties with the markets in general. So I don't know. I'm really on the fence. Like I'm not really bothered anyway. I don't really trade, other than trading obviously Bitcoin miner stocks. I just hold BTC myself, so I'm not really too fussed, to be honest.
It's interesting to start stuff in things other than dollars. Like for example, gold. So gold's obviously not a gold thing, and it's not perfect deal. Currency related something. But if you look at like the Dow Jones or the S&P in gold, it looks a lot worse than it does on the normal chart. And that's
interesting. That is.
Which one?
But I don't know what. That's I just wish there was an asset that you could an honest basket of groceries or whatever type index that you could use. I've got it on here actually. This is the Dow Jones in gold and dollars. But basically, we've had money printing since 2008, so you can see that.
Are you sharing your screen there?
I think I am. Let me see.
Hang on.
All right, share now. There we go. Connect.
Okay. Yeah, you're on now.
Here we go. Yeah, so the blue line is the Dow Jones. The yellow line is the Dow Jones priced in gold since 1998. So obviously ever since 2008 with QE1, QE2, QE3, QE4, and what's happened recently, it looks a lot, tells a different picture. And you can do the same on a lot of assets, really.
What about Bobo loves looking at gold versus oil and gold versus SPY. You've got the Dow Jones there. I was looking just quickly at this correlation between gold and the TLT. I'll take Bitcoin off here, but they seem to be following. That's the the TLT versus gold. I think they're following pretty closely, which is interesting because the TLT broke down, but gold did not, and something's going on here, right? Like if these two decouple. That was something else that was mentioned. I don't remember where I saw it, but it looked like the 10-year future, like the 10-year note, looked like it was breaking out before anything else. That was really. Did you guys see that? Where is this thing? Here we go. Did this thing? I gotta put this on another chart. Oh, I'm not even sharing. There you go.
Is that it?
Yeah.
One of those lines. I forgot.
The yellow one. The yellow one's the 10-year. So that looks like it's trying to break to new highs. And evidently, when that breaks to new highs, the stock market is due in for a crash if you correlate that to, say, the SPY or ES1.
Oh, this is cool because this is the blue one is priced in dollars, the yellow one's priced in gold.
Oh, okay.
And, doing equally well, unlike the stock market.
That is interesting.
Well, sort of.
Sort of, yeah. I mean, so what if you do the Dow priced in instead of gold and Bitcoin?
Oh, okay.
Oh, that's gonna be an interesting chart, isn't it?
BLX should we do? Not much data on this. Let's go to dailies. So that's the Dow, and that's the Dow in Bitcoin in yellow.
Huh.
Oh, so that dump here, this massive dump here, was not really. Actually, there was a bit of a pump here, wasn't there?
Yeah, so how does that make sense? So that means as Bitcoin would go down, that chart would go up, just by the way the relationship that you have, right? Dow and priced in Bitcoin.
Yes.
So
Well,
that means
this is the question about whether Bitcoin, to what extent is Bitcoin a fear on, fear off asset? And it's obviously been fear on. There's this correlation indicator is quite good as well. Have you seen the
Coefficient correlation.
Yeah, correlation. Need to put in. I can't remember how. So we're on. If I put in BTC or BLX, turn that off. I'll just go to DJI, so you can see to what extent different things are correlated. Bitcoin. So there's periods where it's correlated and periods where it's anti-correlated. Look at the S&P. So
That looks like it's been inversely correlated more recently, doesn't it? No, more correlated. Sorry.
yeah, it does.
wait. So for us stupid Americans, can you explain how to read this? Because my head's spinning here.
This is basic. So whatever symbol you've got on your main chart, so the S&P in this case, let's do S1 actually. You can pick another. You can add an indicator called the correlation coefficient, and it shows you how they're correlated. So if I put in,
yes, I see.
if I change this one to UI, they're going to be 100% correlated because it's the same index. But you can compare. Let's say let's do gold or something. But it's a similar thing where you have periods where the stock market is correlated with gold. So is gold or Bitcoin acting as a hedge against monetary policy, or is it just people have got cheap money to spend on stuff, so it goes into Bitcoin as well as the wider stock market? And it's interesting that since the crash, I suppose during the crash, there's a bit of a disconnect here, but it seems to have flipped around the bottom here.
Yeah, I mean, I've been looking at the correlation between that since the 20th of Feb. So the correlation, I've literally just done the correlation now quickly. So the correlation is 0.57 between BTC and the SPY. So that's like a moderate to high correlation. That's excluding the weekends for BTC. So that's still a pretty good correlation with the S&P. So hopefully someday soon we'll see the decoupling. It's a little bit like in 2008, 2009 when you had the gold. Obviously, when you have these panicking markets, then everything correlates to one. So as soon as we start seeing the assets like gold and BTC decouple, is when we'll start seeing a little bit more of a calmer environment. Let's say, I mean, in the last cycle, you had gold decoupled, and then a couple of months later, equities then moved higher as well with gold. So it'll be interesting to see how long it's going to take until these actually decouple away from S&P as well. So, but still an interesting correlation for now.
I'm not sure what you can read from that really, but it's just, I suppose it's harder and harder as well with looser monetary policy. You'd expect it to be correlated. So
yeah, man, and it's difficult as well because I mean, even though the correlation is 0.57, that's taken into account that obviously BTC is traded 24 hours a day, and then the US is only traded for 8 to 10 hours a day. So yeah, it'd be interesting if I can't find hourly data. If I could get hourly data for the S&P and hourly data for
we could do a ES1 exclamation.
Yeah, the mini
mini.
Yeah.
I'll try and find hourly data.
It does close over the weekend, but I think it goes through all the trading hubs. So like it'll go through kind of Tokyo.
I'll try and find if I can find the data, then I can do it a little bit more specifically. But even just having the 24-hour data and then just the S&P, then on a daily time frame from the 20th, then it's at 0.5723 at the moment. So that's still a pretty good correlation, to be fair. So I mean, the way I've always seen it is if you're going to have a view on if you're going to have a view on BTC for the next like month, as long as the correlation stays the same, then you've got to kind of have a correlation. You've got to have a view, sorry, on the S&P. Until that happens, because if the correlation's still moderate to high, then I mean, weekends obviously it can do what it wants, but still, you've got to unfortunately abide by the data. That doesn't.
It does seem to be very like it's rapidly flipping between correlated and anti-correlated, which is interesting. The fact it's not just not always up; it's not always positive.
Yeah. It'd be interesting if you could get the data for out of hours data. Yeah, I need to get the hourly data really, and then you can make it 100% accurate.
I'm wondering if the correlation that we saw between the sell-offs back in March, if people who were not strong enough to hold through that sell-off and needed to liquidate their crypto positions to cover their margin calls, if those same people or even new players who have entered into the game, they now understand that if they're going to have a fund that includes cryptocurrencies, that their sort of convictions to liquidate that position may be lower than what it would have been in March. And that correlation that we see between the broader market and Bitcoin and other cryptos may not actually end up holding steady through a sell-off, where we won't see that sharp decline alongside of equities. I mean, granted, if it gets really, really ugly and, people like Paul Tudor Jones or anyone else who has a really serious stake in crypto may have to liquidate. But I'm wondering if that's kind of being planned for right now, and that that kind of, again, sell-off may not end up presenting itself through the Bitcoin market. What do you guys think about that?
Sorry, I was paying attention.
I mean, if I'm honest, I don't like the Tudor thing is like obviously really bullish, but then I don't know, man. Like I always take these headlines like, oh yeah, hedge funds are buying and stuff as a little bit of I don't know. Sometimes I feel like it's just a bit of bait. So I mean, I try and stay away from that as much as I can. Except for when you're looking at the futures and stuff and looking at the volume, like on skew. That I mean, yeah, it's really difficult.
It's not quite like looking at a commitment of traders report, is it? It's
no.
Yeah.
They're telling you what they want you to hear through the media. They're not having to declare their position because they're legally obliged to. It's different.
Yeah, exactly. Like I'd love to see if I could actually get a copy of the actual quarterly report for his hedge fund, then I'd happily agree. Until that happens, I don't know.
Yeah, I mean, look, there's a lot of people out there, smart people that have a lot of money following them, the Raoul Pauls of the world and, the Luke Romans and all those other kind of, they're kind of out of their house fund managers, but they have a lot of people that take their word as the gospel. I think a lot of money has piled into crypto already in the last month and a half. The writing's on the wall, whether you're in gold or whether you're in crypto. If you're a smart investor with real money, you got to park your assets somewhere. And I think that's what we see. Everyone's commenting about this V bottom in Bitcoin back here. Am I presenting? No, I'm not. Hang on a second. Here we go. So everybody's commenting about this V bottom in Bitcoin up here in the top left of my screen. Just make this full. I think this was, from a technical perspective, this really fucks up a lot of charts. It makes it really hard for people to, from a purely technical trading standpoint, want to go long this thing, because the first thing you see when you see this is, oh, that's a V bottom. This is going to retest the lows. While it's really stupid and naive to say that it won't, I don't think it will. And I think that's because this was an engineered sell-off that forced people out of their positions in a way that the OK coin, stop-run fuckery used to happen. It's kind of the same thing here, except it was more of a, the whole world got stop-runned out of Bitcoin because they, big money had to liquidate. But if you look at this chart on a weekly standpoint, this came and retested the original double bottom breakout of Bitcoin here back in the beginning of 2019. You can see the tails went straight into this neckline and boom, right back up. So to me, that's almost like a natural oscillation of the price to come back down, test it, and go back up quite quickly. In fact, in only 2 weeks, we're back up to those levels. In those instances, in my trading plan, I can buy those double bottoms. Now, I didn't buy it in Bitcoin, but I bought it in Ethereum when it went down to 90 some odd dollars. I would not be surprised to see this thing continue moving higher. I really think a lot of people have piled in here, and it's not just institutions. I think that they are, it used to be the millennials and, the people that were fucking around with it just for fun. Now I think the old dogs, the baby boomers, or the Gen X, maybe older Gen Xers. I don't know, want to go as far as the boomers are getting into this thing because, they can barely. I had an email from a guy.
Peter Schiff in yet?
What's that? Yeah, exactly. No Peter Schiff. I don't think Peter.
That's
Peter
what we
Schiff,
know. The
Bitcoin. If Peter Schiff is buying Bitcoin, then the world's fucked for sure, and so is he. But anyway, that means the government's decided to seize gold, and he needs to get his assets into Bitcoin. But nonetheless, I am slowly but surely getting more and more bullish on this thing on a higher time frame. Going into the halvening, I get all the arguments. This is a buy the rumor, sell the news situation. I get it. Halvening's going to happen.
The thing is, everybody knows that, and anyone who's done some research, that's what that's kind of the consensus view. So,
that this is a buy the rumor, sell the news kind of thing.
Yeah.
But if everybody thinks that, here's the most confusing part. I think everybody knows about this already happening, and everybody kind of anticipates that this is going to pump. But then everyone also knows that it's going to sell off too, and it's kind of a confusing perspective to be at as a trader who knows this kind of thing happens. Are the other people in this market also traders? Are they going to be dumping on the public and get this retest back down into $5,000-$6,000? A lot of people seem to think that way. And it's, again, I said it would be stupid and naive to believe that it wouldn't do that. You can see 61.8's down around 6,200. Perfectly logical place for it to come down to. I think 38.2, if it came down to 7,800, retested these moving average crosses that could happen, that'd be a perfectly logical place for it to go to. I mean, is Bitcoin going to take off like the old days and just zoom to $55,000 like the stock to flow chart? I don't think so. I don't think that's happening either. But I think this is going to be a gradual, this looks to me like accumulation that happened here. This was like a sideways bull flag that just got crushed down, and we're just trying to resume what got technically destroyed here. I'm bullish this thing. I'm becoming more and more skeptical of this cross correlation between Bitcoin and the S&P. If we do get that sharp sell-off in the next month and a half in the equity market, then maybe we do get that correction. Maybe we don't. I mean, look, you got to have your convictions and you got to establish your narrative. I
noticed with that dump, that was kind of make or break level, because obviously weekly turned stock to flow model and the everything. It was a point where Bitcoin complete. I'm certainly to. It's but it looks pretty strong to me.
Tom, I think we missed you there a little bit, mate. We were a bit patchy.
Oh, right. I'm just saying, yeah. There was on that dump, because that all happened before the coronavirus. It was a few weeks prior. But that where it hit that 200 week moving average, there's also all of those logarithmic curves you'll have seen, and the big sort of stock to flow model and stuff like that were all at that level really. So it had to reverse there to hold all of that, and it reversed in style. So I'm pretty confident about it. But it doesn't mean to say that it can't come off and backfill a little bit.
Yeah, I did actually have a logarithmic chart on my screen there. I forgot that was on there. I was like, why do those highs look so close to the other highs? That explains it.
I agree. It's like it is really difficult because, I mean, this is the first time that Bitcoin is going through the end of an economic cycle. So to know what's going to happen and how it's going to react during this part of the cycle is going to be really difficult. Like, it'd be great if it was nowhere near correlated to legacy markets, but I mean, we just don't know, do we? It's going to be weird of how we'll look back on this in like a year from now to know what actually happened. But no, it's difficult for me. Yeah, just hodl. That's all I do. It's the easiest way.
Well, that's
no need
it.
to read anything.
The thing is, I think everyone should own a bit of Bitcoin, and you know what? You should just keep it on a Trezor and forget about it. Let's take a look at it in a decade.
Yeah,
I agree.
And not trade? What are you, nuts?
Well, I can see an argument to trading it, but you know,
I don't.
I always found Bitcoin and crypto in general very hard to trade anyway, because the amount of fuckery that goes on and the unregulation of the markets. I found traditional markets a lot easier to actually trade. So
bingo, I agree.
Exactly, man. You've got like 20,000 of the stocks you can choose from. Patho Bear, calm yourself down. You don't need to trade the corn. Leave the corn alone. just trade everything else. Like there's thousands of other places to trade. Sorry, I'm gonna carry on eating my crumble.
Oh, crumble. My favorite.
Crumble.
Yeah, I mean, it's hard to establish. Here's the other thing you could do. You can do some fib extensions of the range here. You take this area here and then just simply extend this out. You can start to get upside targets if you are a bullish, crazy person, right? So you've got your 200% extensions at 17 grand, 1.618's at 14.5, and 1.44 is 13.4, and that correlates back into these wicks up here. I think that would be a logical area for this thing to come into if it breaks above this area. This is obviously a key area. This is a key resistance zone. If this thing breaks above there, then I think we rocket straight up into that $14,000 to $13,500 area. I think that makes a lot of sense. But the issue is right now, you're at an impasse. Do we break up or do we break down? And I don't think anybody knows the answer to that. If you try to look at the fundamentals, you try to look at the flows of capital coming into this thing. I mean, I don't think I keep like sucking this guy's dick on the show, but Paul Tudor Jones wouldn't be buying a market up in this area. He'd be buying down here. Now, who knows? Maybe he did buy down here and he's just publishing now because he wants to sell. You never know the game that these guys are truly playing on the back end. So at the end of the day, you just got to realize we're at a key level. Break above it, you got your upside targets. Start looking weak on the downside, you can see your downside targets. And as Warwick said, if you are a firm believer in Bitcoin, just like if you're a firm believer in gold, you buy that shit and you put it away. That's really all there is to this market. Now, got myself some throat problems here. Anyway, as far as Ethereum, I think it's a little bit different. Let me just see. I don't know, is there anything else you guys want to talk about before I move away from Bitcoin?
No, not really.
No, you can talk about your shit coins now if you want. They clearly don't give a shit. To be fair, how long have we been talking for?
I think
it's been like
an
4
error
hours.
has occurred.
Is
It's
it
99 minutes exactly. If only it was 66 minutes, that would be perfectly crypto.
I can't. Yeah, right. I can't tell if this is working or not. It doesn't look like the YouTube has come back.
No, YouTube is just put an error.
Oh wait,
No,
it's back.
It's still going for me. Yeah.
Is it?
Okay.
Yeah.
I don't know
It's
if you
still on.
tuned out, but sorry about that. If you witnessed the stream coming down, my big knee ended up kicking the power off button on this computer. I don't know why they put it on the front side of the computer. All right. Wherever we were, I clearly derailed us all, but I'll just finish up really quickly with Ethereum because I think Jamie was talking about how I was trading shit coins, and he's definitely not wrong. I mean, here's what
I'm not bothered about shit coins. You can chat about the shit
Yeah.
coins. I'll go to sleep.
Okay, I don't know if you guys want to leave or anything, but Anyway,
Well, the only interesting thing me and Woz have been doing with crypto is doing option strategies on Deribit, and it's a bit complicated. You need special spreadsheets and stuff, but they kind of price everything in dollars. But you can do things like collar your Bitcoin position at the 10K level or whatever. So those sorts of strategies, and it's liquid enough that you can just about get away with doing it.
Yeah, it's not.
We're still working on
perfect.
it. There's lots of weirdness. It's very.
What's the liquidity like with Deribit? Like,
It's all right.
It's all right. Yeah.
The spreads aren't great. You're probably about 5% spread, 10% if there's lots of volatility in the market, but it's usable.
Is it?
It's yeah. So spread,
Well,
but you're not hitting the bits. No.
Big cojones.
The volatility's dropped way off as well, because it used to be, last time I looked at this like 6 months ago or something, the IV on those option chains was 150, 170%, which is, absurd compared to a normal market. But it's now back in the 40s or 50s, so it's actually, it's not too bad. And they've got, they do have quite a lot of, a few too many maturities for my liking, but yeah, you can make it work.
How is the what's the margin requirement on there for
It's really good. Yeah, it's
right.
I can't remember what it is, but it's a lot lower than traditional markets.
Yeah, it's noticeably not too bad. Really, it's you probably get 10x.
Go on, mate.
Well, I just about to say you probably get about 10 times what you put in. But I know they got the one thing I don't like is that they've got one of these BTC times 100 liquidity. There's why would someone want 100?
Well, yeah, it's cross margin, so you can choose to control whatever position size you want, and then your account equity defines the leverage. But you can take stupid positions if you want to. Then you're gonna
wait. Say that again.
They want you to get ranked, basically.
If you really want to live dangerously, you can, with a 1 Bitcoin position account balance, you could probably take 100 Bitcoin position, but you're going to get immediately liquidated. But you don't, but it's cross. It's called cross margin. So it basically uses your account balance across positions you have.
Oh, okay. That's interesting.
Yeah.
Do you have margin of requirements for it, or is it literally just until you get wrecked, then they ring you up?
Oh no, they don't even do that. It's all locked in, so it's pretty standard. You've got your initial and maintenance margin, but they price everything in dollars. So, for example, on Bitcoin, you've got each option contract is worth 0.1 Bitcoin, I think, and they also have Ethereum on there. And then they've got futures and a perpetual swap contract, so you can construct various sorts of positions.
Yeah. Tom, do you ever look at the SKU website to see the different data for the futures contracts? It breaks it down pretty nicely.
I haven't seen that for Have you got that for Bitcoin?
Yeah, I have it for both
Ether
nice. and Bitcoin.
Oh, that'd be cool. No, yeah.
Yeah, you just skew.com and then you can see these analytics.
Oh, cool.
They actually show you on Deribit the current day calls that are bought, sold, puts, options volumes today look interesting. What contracts people are participating in. It's a really nice breakdown. I love this.
Where's
That's really sexy.
Which one of those is the skew? Is it that? I can't really see what you're.
You mean the skew for
the prices of puts versus calls?
Yeah.
Is that on? Because that'd be good to know.
Here's the put call ratio on here, right?
Oh yeah, okay.
So you can see, looks like volume, open interest.
Because you get the nice U-shaped curve on stuff like gold, and then you look on the S&P and it's a mess.
Absolutely.
I want to see one of those for Bitcoin. That'd be very handy.
Yeah,
but
I really
just anecdotally, just from having done it a few times, it's it doesn't seem, sometimes it's a small debit, sometimes it's a small credit to put on a, equally out the money collar or something. So it seems okay.
Yeah, definitely check this out. I tried to get an institutional account. They wouldn't give me one. They will only let you get an account if you are an institution. And I tried with my business, and they were like, "Nope, that's bullshit. We looked into you. You're not a crypto business."
We could try with a mining company.
Yeah, I think you guys might.
Yeah, that's good. That. There we go. Some cool data on there. I really like that. Those charts.
Yeah. It's just you can't really change anything. It is what it is, right? All right, so let's just roll through let's go through Ethereum and then the other shit coins that I've got. First thing with Ethereum, just easy trade here on Ethereum to the long side. I took this extension, I think last week, and showed everybody where the potential profit targets were. I don't know if I had this orange line last week, but I think I drew this on purpose and said this would be a perfectly interesting and acceptable level for this thing to go into. And sure enough, here we are at the underbelly of this initial breakdown, which is very similar to what's going on in Bitcoin. We're just testing resistance levels at this point. Can we break above, or do we shit the bed? These moving averages are very far apart. The internals look like they're trying to resolve the bearish momentum right now. No sell-off in sight, but weekend. I think what I did say last week is that weekend trading was going to be really fucked up. Last Saturday and Sunday, I think let's see, so today's Friday, so go back 7 days to May 1st. These were those 2-3 candles, right? Friday, Saturday, Sunday. It sold off and then powered back up. That was a little bit of a confusing trading weekend, but we still held the line, no real sell-off. These lows here at 190, 196.99 and 197 seem to be really nice levels to be putting stops on. If you're not trading this on leverage, I would certainly be moving my stops up to those levels, because if you do get stopped out, I would assume that we're coming down to the 200 period and 38.2. And then you can look to put on the position again and at least cut off some of your downside. I think that would be perfectly acceptable to do. Hell, even that 200 period moving average lines up with the previous swing high before we went back up again, and the swing low down here at the other orange line. So we're kind of caught in between these two levels. I think it's the same situation as Bitcoin, but what really has me fascinated are the shitcoin markets. I have some bags that I have had for a while and some new bags that I've been putting on. Yeah, you guys know
new
those
bags.
You guys know the old bags pretty well.
I've got plenty of old bags.
Yeah, the fucking old bags.
But enough of
Most of them have been delisted.
We all.
Yeah, I mean, one of them that's really caught the whole crypto universe's interest is the ZRX. I don't know why the hell this thing is pumped, but I looked at my account yesterday and today, and I was like, "What? Why is it up so much? What's going on here?" It turns out nobody knows why this is pumped, and if you guys know, I'd love to hear it. But I've searched Twitter.
I think it's a shitcoin with illiquidity, so I think that's what classic illiquid asset that can go up 100%.
That's a great.
We've seen this on a few of. It was like Raven, and there's been a bunch of them. So these really small cap coins that don't really do anything have started popping, and I presume it's just miners choose to mine something, drive the price up, and then sell it. So they have these quick pops and then dumps. And I don't know much about ZRX except that, as far as I can tell, it doesn't do anything particularly novel. But there are some of the more interesting projects. I've not really been following it too closely, but some of them have started looking fairly strong. Some of the bigger names. There was, I'll have to find it, but so if I chain link, and what was that?
Tezos.
Yeah.
Tezos is one everyone's talking about.
Yeah. What's the one that powers the Brave browser? Is that?
Oh, that's all you, Jamie. You love that shit.
PAT.
Yeah,
That's,
man. I mean,
Oh, yeah,
at
basically,
the, at the end of the day, from like
it doesn't look that
classic
great.
fundamentals, the only one you can look at is ones that actually have use cases, and the only one that do have
Yeah.
a use case. This is basic attention token. There might be a couple of others, but I mean, I use the Brave browser, and the Brave app browser is shit hot, man. It's awesome.
Yeah,
So,
I did. They've built it out nicely on Chromium, so it just integrates really quite easily.
Yeah, and then what? The other one, the only probably other one that I'd probably look at is Binance. And then apparently, news coming out is that Bittrex is creating their own token soon.
BNB looks really good, doesn't it?
Yeah, I mean, at the end of the day, they're and they're actual projects. I mean, if crypto gets to a point where, which is personally, I think is entirely plausible, where you'll have an index just for cryptocurrencies that actually do have use cases, then Brave browser, Binance, Bitcoin, Ethereum. I don't really research that many projects, if I'm honest, anymore. But they're four of the ones that I know that I would consider investing in.
You guys, do you like? I mean, maybe you haven't looked recently, but I've always been sort of a believer in, for most of these projects, looking at the Bitcoin pair rather than the USD pair.
Yeah, I think that's an old. I think that's
is Bitcoin, isn't it, doing its thing, and then that's obviously going to affect the price of everything. But if your objective is to make Bitcoin, then things in USD.
Yeah, I think
some of the
yeah, I think the BTC aspect. I feel like that's an old, like we're old school. So people who talk like pairing it with the BTC, I think that's become like an old school way, because ever since like the 2017 pump, everybody, like all the noobs, were obviously buying all cryptocurrencies with using USD pairs. So it was quite interesting up to that point. I don't know about now, but I'm all about just trying to collect as many corn as possible, rather than
Yeah, I tend to agree with Jamie about that. You know, people are trying to use technicals on Bitcoin pairs, and I don't think it works as well. Remember, people were even doing it on Ethereum pairs, and I thought that was even absurd. But hey, if you can make money doing it, don't stop by any means. You know, there's certainly ways of, making money based on looking at the different pairs, but I think there's very solid points as to why you should be looking at the US dollar. But as far as the point that you made about ZRX and the fact that it was a pump, I think I just wanted to say that it's not a contract that's traded on a futures basis from any of the exchanges with leverage. So I think there's much less participation, and therefore it's much easier to pump. But what really has me concerned is, like, this thing just really went crazy and it hasn't crashed yet. Like, this is 2 days in a row where it keeps going. I mean, unless this thing is that illiquid and they're expecting people to chase up here, I can't imagine that there's enough liquidity for these guys to be constantly dumping on the public. I feel like there's something else going on here other than just a simple pump and dump. Maybe it crashes by the end of the day and then it's just a pump and dump. But there's something here and nobody knows what it is. Maybe
spike as well.
Yeah, I mean, something's going on. Maybe it's part of a pump group.
It's beaten all its highs as well recently.
Yeah,
I mean, all the way back. Yeah.
Sometimes I think when you get to these environments as well, it's kind of like the Texas of the second, Texas is like the first state opening for COVID. I feel like sometimes you get these test pumps, and one pump has to basically test what their sphere's like to see how many retail traders are actually buying it. Like I've personally had quite a few people text me and go, "Oh, what do you think about cryptocurrencies?" Like, so it'll be interesting to see. I mean, you were saying, Lomax, that on Google Trends, which is one thing that people look at, isn't up anything at all. So it'll be interesting if the last couple of weeks with it hitting 10K, whether that'll start to gain traction for people to start buying it. But again, it's really difficult in this environment when you're having a recession. So who knows? Who knows?
Hard to say.
It's not
got a terrible market cap either. It's only 266 million, which in terms of altcoins.
What does it do? What's the use case? What does it do? Does it shit out ice cream?
I don't think it. Oh,
I think it used to be
someone
an
said it's about
anonymous
exchanging
coin.
tokens or something.
That's a great line. I'd buy
gotta
any
be.
crypto that shits out ice cream.
Oh yeah, that's a legit use case.
I mean, that's 266 million market cap worth it if it shat out ice cream for free. I mean, low production costs. I don't know how you feed the engine, but I mean, it's just like these shit coins, they don't do anything. So, like, if they don't have a use case, what's the fucking point in saying it's worth 260 million?
Well, it says its use case is peer-to-peer exchange of ERC20 tokens, but kind of doesn't Ethereum do that? So I'm not really sure. It sounds like another thing that doesn't do anything.
I mean, and then the competition of that as well. There's like fucking how many platforms that do it probably 20 times better as well.
Yeah,
I'm gonna get hacked, aren't I? After this,
Yep.
let's.
Oh,
I mean, I looked at RX. I bought it here. Yeah, to the moon.
Does he shit out ice cream? Yeah, so I mean, the point being is that there are definitely some coins that are starting to perk up. I think that if you have some old dust sitting around, that it might be time to set some sell orders and revisit the accounts and see what needs to be sold off and repurposed into a more realistic vehicle other than like, your Dogecoin, no hate, but come on. And a couple of these other ones. But, there's definitely, like, I just have this Coinbase tracker up here, or sorry, watch list. These are all the ones that are US dollar traded on Coinbase. And you can just go through the list and see which ones have taken off, which ones haven't. One of the ones that I like particularly is this Ethereum Classic. This hasn't really exploded yet. You can see it's not quite a double to 78.6, but you can capture 30 to 40% on the upside on this one. Actually, it's more than that, but that looks like a nice setup. And then some of these other bullshit ones, like Algo, same thing here. This is probably a piece of shit. KNC, this already popped, can't do that. Bitcoin Cash, I mean, that one always pumps. Whether you hate Roger Ver or not, there's still probably money to be made in this one. I own a bag of EOS. This actually looks like dog shit too, but I can imagine this is going to pump inevitably as well. This XLM has already pumped. This ended up pumping alongside of EOS like a week ago, but XLM has actually maintained itself up in this level. I can't advocate buying this thing up here, but it certainly hasn't crapped the bed. It almost looks a lot like Bitcoin and Ethereum.
That was a really strong one last cycle, wasn't it? Because it's well funded and backed by
IBM,
loads of institutions and whoever.
Yeah, that looks cool. You can see if you go from the highs to the lows. Look, you want to start drawing your fantasy trend lines. Oh, sorry, your fantasy fibs. I guess now's the time, but don't get too crazy. 38.2s are probably the best place to be looking at this thing. Maybe have a little bit left for more upside, but I fucking hate all these things. I just buy them because I can make money on them. They're all shit coins, and if they shat out ice cream, I'd probably like them a lot better.
Yeah,
by the way, if anybody has a Ethereum sat in a wallet somewhere, the other day I got an airdrop, which you get loads of crappy airdrops all the time. But this one was actually worth money. So they did this airdrop that was worth a decent chunk. Unfortunately, the chart looks terrible now, so that it got immediately sold. But it's still, the airdrops are starting up again, and they're for fairly substantial proportions of your ETH holdings and stuff. So that's another side that's interesting.
The exchanges aren't going to pass this on to people. So what are the exchanges doing with this shit?
No, yeah, I guess they're keeping it.
Another altcoin pair you've got. Everyone loves a good Digibyte, so Digibyte's moved up. But one that usually has pretty good correlation with it in an old school manner is Sharcoin, is it? SC, the ticker. That usually, those two historically do pop off quite close to one another. I don't know how IC's gone on. DGB has moved quite a bit recently. But I don't know if SC has.
Huh. Yeah, look at that. Oh, that's a weekly chart, but you're
This
right.
is I'm just looking at Coin. It's another one where it's put in a third high low. So I mean, it's a few of them are doing this of the older names, which looks it's not exactly bullish, but it looks okay. It looks like
I'm tempted to go in on just go crazy and just go in on one shit coin. I was looking at
22 sats as well.
Yeah, one of the old school alts I was looking at was remember game credits.
Yeah.
Yeah.
So apparently some other token. So apparently some other token has partnered with Game, and now they're going to create a new token with Game. So whether that ends up moving just because it's got some sort of, I suppose you can call it news. So I'm keeping an eye on that one, see if that one moves a little bit. But I mean, that had crazy gains. I remember that one back in the day when Poloniex was actually I don't want to say good, but when you had to use it. So yeah, how's that gone? But other than that, that's it on the shitcoin for myself.
Well,
So sorry there, lads. I need to shoot the loop. We really enjoyed being on call with you all, but time for me to move on.
yeah,
Nice
sorry.
to catch up with you too, buddy.
This was
See you
fun.
later, dude.
I'm glad you came on.
Yeah.
Come on anytime, please.
Yeah, man. I look forward to it.
Yeah, buddy.
Definitely while there's lockdown on as well. You know, got a bit more time.
We've got nothing else to do. Yeah.
Whoa. I'd love to spend every Friday night with you guys.
We'll be here anyway, of course. Yeah. So.
Anyway, ciao for now. Take care. Look after yourselves.
Take it easy. Bye.
Peace, brother.
All right. So
Is it 9:45?
yeah, it's fucking late, man.
So much for an hour. I think
Yeah,
even I might drop off now. You're on your own, Thomas.
Oh, good luck. I promised one guy I would talk about silver before we left.
Well,
Robert-
let's wrap it up.
Robert
go on then, real
Fisher,
quick.
I've got you right now.
Robert, we got you. Silver, personally, there's 10,000 other things you could trade and get a better understanding of. So silver, personally, from a technical level, if it shoots off here, then yeah, you could then buy some. And then if it hits, I can't actually see your screen, it's too small. Then that blue line, is it 12? If it hits 12, get the fuck out. But personally, there's so many other, like, the difference is like if you're trading like gold or silver, I always find it a little bit like, well, there's so many other stocks out there where you can get a lot more information on and you can understand the gains or losses. So why would you trade an asset where you don't really understand whether it's going to go up or down or not because of, well, I don't know. It's like, it's a really difficult one. So, I mean, if you're looking for alpha, Robert, man, just look for some equity stocks that, from a fundamental perspective, could do well.
You want to name one?
Do I want to name one in this current uncertain environment? Hell the fuck no. I mean, by Monday, Trump could have slapped China, and then everything goes down 50%. So, personally, Robert, I reckon the best thing. I mean, personally, what I'm doing. I mean, I'm not saying it's the best thing, but what I'm doing is until we get a little bit more clarity, you can't really commit too much exposure unless you're going to be hedged. So. I mean, I am hedged like 50-50. So even though I'm long, say 4 stocks, I'm also short 4 stocks. And then hoping that, so I'm doing like a cross-sector trade, meaning that I'm long a couple of sectors, well, individual stocks within sectors that I think will do well in this current environment. But then also I'm short stocks that personally I think will do in different sectors that I think will do bad. So, for example, one simple spread was I was long Cut8 mining because I thought BTC will do well. Huts, I think, was quite undervalued in comparison historically against BTC. And then I've been short CACC, which is a subprime auto loan company. So in the current environment, we don't really know what the delinquency rates are going to be like, but I think that's a good one to, an example of a spread trade. So I don't know, man. Like Robert, if you're actually still listening, firstly, congrats to listen to our drabble. 2 hours. But then there's so many different stocks out there, man. Honestly, just get on Nasdaq, and you can get a list of all the stocks and just do some research. But if you are fixated on silver, I can't comment.
I actually like silver just because. So it's been disconnected, but silver tends to follow gold to some extent. It's had this big V bottom sort of thing, and a little breakout kind of thing going on. But if you look at some of the gold miners, they've all been doing really well. You know, gold's kind of stuck in a wedge, but it looks pretty bullish. So just the opportunity for gold to at least, because it's stuck in the middle of its range at the moment, it could consolidate and move higher. So I'm cautiously doing like terminal spreads and things on it. But just because I think it's lagging gold and it may have some room to go. But yeah, I'm not like super bullish silver. I think it's losing a lot of its use cases. It's just a byproduct of mining.
Like another way to, I don't think it's another byproduct of trying to become a safe haven. But the difference is that I mean, I thought personally that if silver was going to move up and then catch up with gold, it would have been with the COMEX problems. So, you know, when COMEX had problems in the US and they couldn't actually deliver the amount of gold, etc.
Oh, yeah.
I would have thought at that opportunity, I thought that's when maybe you would have seen silver start to get a bit, but you didn't really see much going on. So it's really difficult, to be fair. Like, I mean, you can never have, it's never bad to have like a few percent of your portfolio in gold, silver, etc. So it's never a bad thing, but to get a large position, I think it's just.
Yeah, I think for me, it's definitely a trade, whereas gold is long-term holds. Sort of.
Yeah, definitely. I mean, it depends on what you're doing, Robert. If is he still here, do you reckon? But it depends on what you're doing. Like, I mean, it depends on what you do as a portfolio. I mean, it depends on what your portfolio is. It depends on how you trade. Are you an investor? Are you a trader? There's so many different scenarios when you're looking at specific asset classes. So I don't know, maybe, but I think he's given up on us, and I don't blame you, Robert. I don't blame you. Like, we've been chatting English for so long.
I think that was quality content.
That was great. I mean, I'm going to do this up from a technical perspective. I think that if you do want to go long silver, which I agree with everything they said on the long side, Thomas, I like your comments, and obviously, Jamie, you're priceless. I love that shit. You know, fuck silver. Buy something else. Buy something that'll get you more. I mean, look, how much money do you want to make on this thing, and how do you want to play it? Like, if you just want to own the underlying, is this thing going to double anytime soon? I do not think so. No. But if you want to play this from a leveraged position, I think that could certainly be something in the cards. But as far as targets are concerned on this, really quickly, I can just tell you that, you know, this is really where you're going to be looking at as far as your longer term targets. If we can even get up into this area, that would be really nice. But first target up here is $15 on the SLV. That's about, you know, 50, call it 60 cents from here. And then more to the upside, you know, 200 period moving average is sitting at 1580. So what would you want to be playing? If I wanted to play calls, I'd play the 15. Actually, you know what? I would actually play this through a synthetic. Let me see how this is pricing out. If you don't know what a synthetic is, I'm not going to teach you what that is. Go look it up. So anything.
Yeah, vertical spread or something like that. That'd be cheaper. If you got a smaller account, you could do it with a bull call spread.
Well, look, the June calls. If you buy the $13 call, it's an 80-cent delta, and it bids $1.68. You know, you could throw on 10 of those; it'll cost you $1,700. Or you could have the position. You know, this is relatively cheap to put on. So if you think this thing's going to capture the upside, I think that's, and the implied fall. You know, it's not terrible, but it's kind of high actually. But anyway, you're going to be insulated from that with your 80-cent delta. If you want to go for a 90-cent delta, your bid is $2.55. I'm going to go with the the $13 call versus buying something like a $15 call, right? Because if you buy a $15 call into June and you expect this thing to go to, like, I don't know, call it $15.50, that it'll double for you at the 50% level. So you can double your money with that on a $15 call, or you can buy the synthetic and you can capture an additional dollar per contract to the upside. So you're not going to double your position. So it just depends on how you want to play this. I actually kind of like the $15 call here, even though it's a little on the expensive side. Or you could just own the underlying and sell premium against it. That's another, I think that's how you're probably playing it, right, Tom?
Yeah, that's what I'm doing, yeah.
Okay.
And that's worked out fairly well.
So you sold the $14 puts, was that right?
I started at 12, I think, but I've now rolled that up to 13, which just reduces your risk if it doesn't work out. But on the pump, I've rolled up the short puts. So yeah, just harvesting premium and while it's doing this breakout move.
Yeah.
It's a bit of a complicated strategy, though. The amount of spreadsheets you need to track all of that stuff is getting a bit overwhelming. I might have to simplify things back a bit.
Yeah, I agree. Keeping track of the shit, and especially with the rolls, is a real pain. And it's so dirty. I hate it.
Yes, it is.
I actually spent all day on Wednesday trying to get my Google Sheets all organized for it. And it ain't any good.
It's hard work.
Yeah. So I'm just going to put this $15 call on here. It's 55 cents. Why did I think it was less than that? What was I thinking? Oh, well. Okay. I was looking at the 16. I don't know what I was looking at. Well, that was dumb. All right. So the $15 calls are bid 55 cent, ask 56 cents. That's not going to get you anywhere. You really need to believe that this thing is going into this area here. I don't think that's happening in the short term. I don't think June is enough time for that. If you're going to look for a longer dated one, like a July or October, it's going to have more time premium. And I don't think it's going to work either because, your $15 calls are $1.40. You need this thing to go above $16.40 in order to be profitable. And in a short-term move, I don't think that's happening either. So you've got...
The tricky thing with that as well is you've got it won't pay off like the archetypal option curve until maturity. So you need to know when it's going to happen as well if you're doing that strategy.
Yeah, exactly.
I think, what's the IV like on silver? Maybe it's just a matter of buying the
It's too high.
It's too high. Okay.
It's 43%.
Yeah, it's too high. Yeah. That's where these diagonal spreads have come in handy, but they are quite complicated. It's a lot of management as well, a lot of messing around.
Yeah, what about something like selling a higher up call for, if you bought the $15 call and then sold the $18 call, just to, you would
really reduce your margin, reduce your risk.
Yeah. I kind of like that. The 15, buy the 15.
Oh yeah, so you get it's 56 versus. What about the 14 versus the 18? Well, it depends what you want to do, really.
I would buy the 15 and sell the 17.
Yeah, and then your max risk is $200 per contract.
So buy 15, sell 17. I'm going to do 10 contracts each. So you're getting a net debit of 37 cents. Let's see what this looks like. So this is only going to cost me 383. So I'm going to increase the positions. I'm going to triple them. No, I should probably 6. So I'll do 60 and 60 just to get the size.
I'm going to have to hop. I will catch you all next week, I imagine.
All right. Jamie, it's been a pleasure.
It's been a pleasure. Lomax, good to catch up too. Long time no see.
Should we do it again next Friday?
Next Friday? Can I do next Friday? I think it's my birthday. It might be my birthday next Friday. Can't remember what day is that. Is it next Thursday? I can't remember. I'll have to get back to you. I'm not too sure, to be honest. Something like that. But
that's hilarious.
But yeah,
so you don't want to spend your birthday doing this show.
Put me in a corner or anything. No.
Be quite honest with you.
I just can't remember. I organized stuff with the family. We're going to do like some sort of like party because it's not just my birthday as well. I also have a twin. So I think we're gonna. I might sort some. I think I'm sorting something out with the family, like on some sort of website where you can do stupid games and stuff. So who knows? I don't know, but I'll get back to you and let you know.
Cool.
Well, have
All
fun.
right, then.
Yeah, let me know when your
I'll
birthday
let you
is
know.
too.
We'll do, man. We'll do. Take care of yourselves. All right.
Take it easy, Jamie. Thanks for hanging out.
Yeah. We'll
See you, mate.
Take care. Take care, lads. See you in a bit. Push,
Bye.
push.
Yeah, I've got to shoot as well soon. Well,
Yeah.
fairly
So
shortly.
yeah, me too, actually. But I think that this is kind of the way to play it. And now I'm just toying with the 14 call versus selling the 17, or sorry, selling the 16 into June. You know, this would really have to pop and explode higher.
Let me find a chart.
Yeah. So right here, if I bought the $14 calls, those are going to cost me 99 cents, right? Yeah, 99 cents. And then if I sold the $16 calls, I would get 31 cents back. So this would essentially cost 68 cents. And then this thing would have to stay under 16 bucks by June, which is kind of, kind of scary, right? Because if this thing does pop, then we're cutting off our upside too.
There's a cool thing you can do in here. Let me just. What strikes was it you were looking at again?
Either buy the 15 and sell the 17, or buy the 14 and sell the 16.
Until June. Yeah, it's probably it'll take me too long to get it up. But there's a good tool in Interactive Brokers called the Risk Navigator, and you can kind of put these positions in, try out different positions, and it will show you the payoff at different dates. But you normally see that you need to be fairly precise about the timing as well as the strikes, because it doesn't start to pay off like that until down the line a bit.
Yeah. I mean, this is saying max profits 9,700. That's not, you're not going to get that unless it happens tomorrow.
You want it to clear the top of the vertical spread.
Yeah.
And get it or become intrinsic value.
I think I like the 15, 17. That seems less risky. The chance of, if we are playing this to the long side and it does break above this kind of area of resistance, I think we're going to get a pretty quick pop into the 1550. And then with a possibility of going into the $16 range. I mean, look, that's going to be a pretty serious move, right? Because that's 10% move brings us to 1580. It's a pretty serious move in of itself. And you've got this gap here. And June's not that far away. So it just depends, do you want to monetize this thing with it cutting off your upside at $16 and monetize it with 31 cents? Or do you want to pay... I'm kind of torn here. I don't really want to cut it off.
Yeah. If you expect, if the thesis is that silver's going to catch up with gold at some point, then a move from 15 to 17, maybe 17 is a little bit high, but certainly a 15-16 spread or something, that'd only take you up to the 61.8. So that's fairly conservative, and it'd only be a $1 spread.
You think that would be okay? I mean, the problem I see is, again, if this breaks out, I think it's going above 16 bucks. But then again, June's a month away, right? So
yeah,
it just depends on your time horizon and your conviction on what's going to happen to this market. I think the safer one is the 15-17, but again, that depends on this breaking out as well. So I'm going to put it in as the 15-17 because I think it is going to break out. This is going to cost me, again, that 37 cents a contract, selling that call. So I'm submitting this, and I hope this thing executes even though the market's closed. Right? Like, why would it wait for market open? The market's closed and this is paper trading. All right, I'm hoping this is in there.
Yeah.
All right, so that pretty much concludes. We've got 4 positions. If you have any of the other positions from the previous show that are not performing well and you don't have top set, I'm sorry you listened to me. Again, you should have done the opposite. Like, this is just for entertainment, right? This is a paper trading account. So this is how I have these positions in my account too. So if you're suffering with me, welcome to the club. You've got, what's that saying? Misery loves company.
At least you didn't try and short Tesla. Like me.
Right. Oh my God. What a crazy move.
That's one of the 3 or 4 stocks just keeping the stock market propped up, I think.
It's incredible. He tweets that his stock is overvalued and then it's still recovering.
Yeah.
I mean, I don't get it. Anyway, we're running really late here, man. I don't know. I know you wanted to hop. It's 5 o'clock for me. I'm going to start drinking now. This has been quite the show. That was fun. I would love to do this.
Good fun, man. Yeah. Love it.
We should definitely try to get Bobo and Raf on here too, and maybe we could have an even more robust conversation. But I feel like I have a better handle on what things you're doing just from talking it out with you guys.
Yeah. There's trying a lot of new stuff out lately, so it's quite interesting to talk about these things because I tend to, you definitely need second opinions on a lot of these strategies.
For sure. Well, I guess let's call it a day. Robert, I hope that SLV was some help. Owning the underlying, again, you're not going to make too much on that, but, stylize it as you wish and make sure you own the physical as well. I'm a big proponent of owning physical gold and silver. All right, let's have ourselves a weekend, shall we? All right, everyone. It's been really fun. Have a good one, Tom. Everyone, thanks for listening. Until next week, I'll probably be joining with a beer and not a scotch, and maybe even a natural wine. I don't know if you've gotten into that yet, but the natural wine movement is picking up steam.
If you just adjust your sleep pattern, like I have to basically do for US market hours, just sleep at weird times of the day, then you can start drinking at 3 or whatever. Something like that.
That's always a possibility.
It's really good for your health as well.
Right, exactly. All right, I'm going to end the stream. Thanks again for listening. We'll see you next